Hello everyone and welcome to Day Trader S&P 500. Today is Monday, July 28th, 2025. This is Dale Woodson, editor of Woodson Wave Report and this YouTube channel. As always, we want to get our YouTube subscribers caught up with our paid monthly and all the other subscriptions we offer subscribers. Today is a big day. It's a Fibonacci turn day. But first I want to get into little something here. We'll go into today's report, okay, that we put out, get you guys caught up. We have a special offer, limited time. It expires on the 31st and unprecedented, but Striker Securities, who is a futures broker, was able to work this out with us, or me, Dale Woodson. Anyway, we reduced our prices on these triggers and targets systems, if you will. Financials is relative, it's not even a month old, it's something new, but a significant reduction in price. And here's how you would go about subscribing to that. But I wanted to show you guys our, I always say I love the bond market, and this is probably why. I usually do pretty good historically. It was a Timer Digest bond market time of the year a few years ago. But here's our trades. The first trade was on July 10th, so like I said, it's not even a month old yet, just basically maybe almost 3 weeks. Okay, you got 6 wins and 4 losses and a net realized gain of 1452. But with our money management system, we try to keep our losses low, our stops tight. But we've been short, we've been long, mostly short because the market's going down. Okay, but the way it works is I am the developer. We use Elliott Waves and Fibonacci extensions, and retracement, that's our trading system. It's important to have a money management system. We've discussed that before. Those who don't have a money management system usually run out of money. So it's good, especially to limit your losses, which we do to 5%. Okay, but how it works is you open a futures account with Striker. They're a futures broker. I am not. I give them my trades, they trade my trades in your account that you open with them, if that makes sense. There's all the contact information for Striker Securities, and William Gallis is the person to speak to. So if you're interested, I'm excited about we've been trading the 10-year Treasury notes, and I can show you guys that in a few minutes here, okay? But there's our disclaimer. And today's a big day. Today is July 28th. It's a Fibonacci turn date. But even more important, it's not only a Fibonacci turn date on one spiral, it's on more than one spiral. We'll get into that in a second, but I want to show you guys this E-mini futures daily chart. We've got a move up from the April 7th low, and then another move up from the May 23rd low. Okay, our target for this this wave 5, we had a target of 64.57 and 64.53 and a quarter, where the red 5 wave 5 equaled red wave 1. Okay, that was kind of hard to say. Anyway, it came within about 4.5 points of that. We have a higher target up here for the black wave 5 at 65.37. I can show you guys this on a chart. It's really small and it's hard to read, but we're looking for a retracement of either this 5 waves up in black that started on May 23rd at 57.56.50, or and it'll show us when it starts retracing, or a retracement of the move up from the April 7th low, which is 5 waves in red. Okay, so we'll find out. We got to look at the shortest time frames in the chart for a signal of a change in trend. So I'll be looking at, as I always do, look at the 1 and 10-minute charts to see if we can see a change in trend. So we'll know on a 1-minute chart, but then of course if it does it there, it'll show up in the 10-minute, the hourly, the daily, all the way up, because they're all fractals of each other, these charts. Okay, so a little verbiage here. Yeah, the market's been registering a higher high almost every day. It's like I was putting in the newsletters, rinse, repeat. Okay, so it's been a rinse and repeat affair, if you will. But today's different. Okay, today the new all-time high was registered within 4.5 points of our target. So today is different than all the previous days, because today is a Fibonacci turn date from the sequence that began from the July 16th high and the December 7th high, both in 2024. Okay, I gotta say this, in my 25 plus years of doing Fibonacci time spirals going back to the late 90s, I've never seen two different time spirals point to the same exact day. Obviously, they're different dates in the spiral, but you'll see in a second here. Okay, now this should prove to be a high of at least some significance. We'll see. I mean, it could go below by them, but not likely. Okay, so here's the one from the 716 high, and the July 28th turn date is 377 Fibonacci days after that high. And you can see here is the slippage, not a whole lot, you know, a few days here and there, and those are all Fibonacci numbers too. 1 day, 2 days, 5 is a Fibonacci number, 3 is a Fibonacci number. So the slippage even falls within the Fibonacci sequence. So today's the day. Okay, and then we get to the one from the December 7th, 2024 high, and you can see this is 233 Fibonacci days from the beginning of that sequence. And again, we have a lot of zero slippage on here, but 1 day, 1 day, 2 days, 1 day, 5 days, and then even excuse me, 8 is a Fibonacci number. So we'll see how that works out. We've been saying this for a while. What we're looking for is 728, July 28th, to mark a high. I call it a perfect Fibonacci world when price and time, where price and time meet. So we've been aiming at this, looking forward to this day, and the market will top in terms of price near our target of 64.53, which it did within 4.5 points, and near our time target of July 28th, which is today. Generally on these Fibonacci turn dates, you get a plus or minus 1 to 2 days. So wouldn't be too surprised if it went for another day or two. But if it went too much further, then we're looking at this going to our higher target. We have one up above at 65.37. I think I can show you guys that, and I'll go to the charts. Yeah, there it is there, 65.37, another Fibonacci target above this one. You could argue that this wave is not yet complete. I could see that. So we'll see. We'll see if time overwhelms price. Usually it's the other way around. But today's the day. And here's the Fibonacci retracements. I'll show you guys that on the chart too. It's either retracing the move up from May 23rd or from April 7th. Okay. So there's our positions. We will change these from long, starting in the short term, if we see a change in trend. I want the numbers to show us. You know, I want to see 5 waves down, 3 waves up to a lower high, and then 5 waves down to a lower low, and then any move up to hold below the first wave low. But a little early for that, but we'll see how that plays out. I think that's about it on this. Yep, and there's the other spirals, and yeah, those are there. There's the circuit breakers for when this thing decides it wants to collapse. Just so everybody knows, I post those every day in our newsletter reports. So let me get to the charts here, and since we're all about bonds lately, I've been for a long time, but just opened that new triggers and targets auto trades. We're looking at an hourly chart of the continuous futures. So this would be the September 10-year Treasury notes. I don't think I've shown this analysis before, but here from this low back on July 15th, we have 1 up, 2 down, 3 up, 4 down, and 5. Okay, whenever we get 5 in one direction, we should have at least a 3-wave correction. And we can see here, I want to label this for you guys. It's going to be a little bit hard to see. We'll take the magnet off so it doesn't stick. We've got a 1 down, a 2 up, and a 3 down, and a 4 up, and a 5, which makes a larger degree. Let me get the thing on here. That'll either be A or 1. Okay, it depends. We get a 5, 3, 5, and it's over, then it's A. Okay, if we get, like I said, 5 down, 3 up, then 5 down, and then the next wave up holds below this, and it's a 1. Okay, and then you can see we've got a 3-wave retracement there. May as well draw that in for you guys. Okay, we've got an A up, a B down, and a C up. and it went right to between the 500 and 618 to retrace target. Okay, so now we're looking at another series of down, one down, two up, and you can see this pattern better on a something less than an hourly chart. Okay, but we're looking at targets of 110.21 and then 110.15 on the treasury notes. Okay, so that's what we're trading. And actually, you don't even really need to know. I like trading segments, if you will. Like, okay, so we saw 5 waves down. It doesn't matter if it's a bull market or a bear market. We got 5 waves down. Should be followed by 3 waves up. It was, okay. So it's a 5, 3, 5 correction. We'll get 5 more waves down, and we can do that right now and figure out where that will be. Let me take that off so we don't have too many lines here. We'll get a Fibonacci extension. We'll put the magnet on so we can get right to it. Okay, so if that's the high, and that's A or 1 down, and that's, I didn't put the B or 2 up there. I will take that off. Okay, then we got B or 2 above the C, so let's just move the C down. Okay, so C or 3 equals A or 1 at 110.07 and a half. Okay, so that's what we're looking for. And we got to look at confirmations, and where we always ask ourselves, where are we wrong? Where is this wrong? It's wrong if we get a move above this high right here, which is 111.14 and a half. Okay, where is it right? When it goes below this low here, which is 110.19 and a half. Okay, that's why I got this little thing here. I got an alert when it's crossing right by here. I'm going to know I'm right. Okay, and always ask where you're wrong first, and then where you're right, so you know where to put your stop, you know where to take your profit. Okay, so and this is just, if it's an ABC, you can see the angle of descent here for A. Okay, if I'm gonna show you guys. Let's just do this. Let's just clone here and get rid of it. Bear with me here while I didn't want to do that. Remove that. Okay, if this is the angle for the first or A wave down, let's do a clone of that. Okay, so if that's A, then C should take the same type of angle. You can see it right there, A, B, C. Okay, but if it's a 3, this angle will be steeper. Okay, it'll be like that, and it'll probably hit the 1618. Like, oh, I moved it. It'll probably, no, I didn't. It'll probably hit the 1618, which is down here. See the difference? You can look at the wave patterns and not decide, but it'll tell you whether it's a C or a 3. Right now, we don't know. It could be either. It could just be a 3-wave correction of this 5-wave advance from here. Okay, but we're still too early in it to tell. All right, so once it passes this wave A or 1 low at 110.19 and a half, then we have confirmation, and we still don't know if it's a C or a 3. But let's just say it. I'll just show you guys this here. Let's just say it's a 3. Okay, and we'll put a 3 here. It's not exactly where it should be. If it is a 3, then 4, which I'll put there. Let's clone that, move that up there. Okay, here we go. Okay, 4 up should not go above the wave 1 low. Okay, if it does, then we know the correction's over, and it was just an ABC. If it doesn't, and it holds, and it makes a lower low to below the wave 3, and I'll put that here, then we have 5 waves down. Okay, so then after that we'll get 3 waves up. It's real simple. You just trade segments, and we're trying to catch this 5 waves down here right now. We know where it's wrong when it goes above there. Okay, but that's how we trade. That's how we chart. First question is, where is it wrong, both on the chart and on the trade, and then where is it right, and then where it's wrong, you put your stop up there so you don't lose more than you should. Okay, because you're going to be wrong. Everybody's going to be wrong. Okay, so that's how the 10-year U.S. the U.S. 10-year Treasury note is playing out, and we're trading that almost every day. You saw the trades right there. Okay, I want to move on to the S&P cash, and let's go to the daily chart there. Okay, these red dates with circles are different Fibonacci turn dates. Here's the most recent one here. You can see it's caught high, high, and high. And before that, I was catching low, low. That's going, and there's a lot more before that, as you can see there. But we're mostly concerned about what's going on now. Okay, and then on this one here, we can do, let's see, we can do the retrace on. I wanted to show you guys that on the ES. I'll get to that next. Excuse me. But let's get out of this. Oh, let's do that and get on to here, and let's do a Fibonacci retrace. Okay, so if we're going from the April 7th low, like I said, we're either doing the April or May low. We don't know yet. We gotta let this thing unfold. It hasn't really even started yet, you know. There we go, get that out of the way. Okay, so in the S&P cash, if it's correcting the move from the April 7th low, our targets are 58.02. The 50% is 56.18, and the 618 is 54.33, and the 786 is 51.70. I think the other one was the May 23rd. Yeah, there it is. If it only corrects the May 23rd, probably did this in the wrong order, because anyway, it's all the same. If it only corrects this 5-wave advance, then our targets are 61.59 for the 382, 60.84 for the 50%, 6009 for the 618, and 5903 for the 786. When it goes below this low, the start of this 5 waves here, this most recent 5 waves from May 23rd, it goes below there, then it's going to be correcting from the 5 waves up from 4.7, and those become our targets. That's why I said I probably did that in the wrong order. But we want to look at the 523, look at these retracements, and then if it goes through the beginning, which was 57.67, then we're going to look for these targets here. Okay, and of course, where is it wrong? It goes above this high. It's a give it plus 2 day, 1 to 2 Fibonacci days, and we have higher targets, which I showed you in the ES. Speaking of the ES, let's get to that daily chart there. Okay, there's a daily chart. Should look familiar. It was what we had on the other one, but from the former all-time high on 2/19, February 19, we had an ABC correction. It's a 535, 5 down, 3 up, 5 down. All right, that's ABC. And back then, where do we know it was just an ABC and correction complete? When it went above the wave A high. You see how it met resistance right there? Actually, did it cross? That high is 55.28, and this low is 55.09. So it did. So that was a tip off right there, that correction was complete there. It was 3 waves, because this could not go above that low. You know, in the other scenario, this would be a 1 instead of an A, that would be a 2 instead of a B, and that would be 3 instead of a C, and that would be 4 can't go above the wave 1 or A low, and it did. Okay, it retraced after that because it hit the previous low right there, but look what we got after that. Okay, we knew back on April 10th that this was going to be a bull market, and look at that. Okay, so we're looking at the red. We got a 1 up, a 2 down, a 3 up, a 4 down, and there's the red 5 up there. That 5 equaled wave 1 at 64.53 1/4. Our high today was 64.57.75. And if we look at the internal wave structure of the red wave 1, that's in black. We have a 1 up, 2 down, 3 up, 4 down, and that 5 equals 1 at 65.37. So that's why we're holding out. You know, that's one more Fibonacci multiple to the upside if this today's high is broken, and we put that in the verbiage over there so we know what's going on. And I want to do the this is the retrace on the E-mini futures for the last 5 waves up from May 23rd, and I want to do for the April low, which is there, and those numbers are 5836.75, that's the Fibonacci 382, and 5645 is the 50%, and 5453 is the 618, and 5180 is the 786. Again, just like we did with the S&P cash, as soon as we get below this 50, that's why I left that up there, 57.56, the price, because that's the tell, if you will. If this thing goes down and breaks below that low, then we know it is correcting the move from here, and we have brand new targets. So nice setup. We'll see how the Fibonacci time spiral works out. I want to get you guys to the report. I think it might be a little easier to see there. Okay, we got all that. Remember that offer expires 7/31. This is a first ever unprecedented, obviously limited time, but we knocked those prices down for you guys. Okay, and there's our record there, trading the triggers and target financials. We can trade the notes or the bonds. So far I'm all over the notes, and for what it's worth, the margin, these are all futures, the margins for the T notes are less than the ES, the S&P futures. Okay, I think the S&P is 2,400 a contract, and the T notes are like 2,000, right around there. There's that some change, so they're significantly lower, so you can require less margin to trade them. Okay, that's another reason why I like them. Okay, and there's what we're looking at there. That's the main thing. We got price and time. We'll see if today holds. Should be exciting or interesting to say the least, but we'll know. We'll look at those 1 and 10 minute charts, and we'll know when it changes, or if it changes, and that'll tip us off for the larger degree waves at hourly and daily. So that's it for now. We'll see what happens from here, and until next time, take care, everyone.